we are going over the energy sector. All right. Now, if you remember, these are different lines. Where were we? Okay, the last time we really kind of talked, we were discussing right around here, this little pop up. Now, we literally got destroyed, but let's keep everything in perspective. Um, where are we? Remember, let's come back over here, so less noise. This is our big 50% mark from the low to high. Let's go to the quarter so you can re-see everything, right? Now we are the 50% mark from the 107 basically down to the 6, right? This is the 50% mark of that, and that's the 6677, right? So let's keep all that in mind. This right here, the 50% of this, the larger trend is at 7796, which that's basically where you see what I'm saying? Right around here. So we hit the 50% mark of the largest trend, the 147 down to the 6, right? Now we're basically playing with the smaller largest trend, if that makes sense. I mean, this is kind of noisy, and I apologize. Let's do this. All right. So let's draw some fibs, some new Fibonacci's right here. Boom to boom, right? So, on the main trend, we're still bearish. You see what I'm saying? We're very bearish. Now we almost hit it twice. We got rejected. When is this? This is October of 18, right? And now we're back there at July of 2021. You see, so this could be this. Remember, this is inverse. You see how this is -6 and this is -147. So we basically got like a double bottom right here. Now, of course, if you're bearish, you want this to go this way. If you're bullish, you want it to go this way. If you're bearish, then you want it to come back down this way. What this chart is showing me, we still have we hit that 50, bounced off the 50. There's massive resistance or support, depending on what you look at it. On this chart, it's resistance, right? On the other chart, if you flip it, it would be support. So there's massive support or resistance at the 62.89, right? So we have every ability to go down to this 62.89, which would be the 618 for you. I mean, it makes it, you see the chart. I don't need to try to confuse everybody even more. So it could roll back up to here and then come back down. We really want it to cross there's 77.53. If it crosses it even just a little bit, then the probability that it's going to continue to be bullish is higher. Let's go back to the regular opposed to the inverse. Now to days. There we go. So this 77 area, which was July 6th, was the big pop. That was the resistance on the other chart. Mind you, these are days. We were looking at quarters before. We're still above that 66.73, which is the pressure point. We need to stay above the 66.73. We have looked below and failed twice, right? So just be very careful. The Middle East kind of things going over there now. Taliban just took over Afghanistan. So the supply route could be disrupted in the Middle East. So let's keep that in the back of our minds. We just kind of cratered on Thursday and Friday, which Wednesday we popped up. This is Monday, Tuesday, Wednesday, Thursday, Friday. Just be very careful with oil. It's very volatile until they really kind of know what's going on with Corona as well. If this variant B comes and it's just destroys all the traveling, then oil probably won't be able to support these levels. But yeah, we'll go from there. Valero, we're still looking quite terrible. Um, how did we come out? We beat on earnings, obviously, because the price of oil has been nice over the last quarter, right? So, but we're still not looking very well. We're at some type of support right here. As long as we stay above the 66.13, then I would say it's still in the bearish territory. But if we can if we can hold this, like maintain the 66.33 or 13, then climb our way up to the 60, above the 69.62, then I'd like to see that. But as long as we're below this 50%, we are in bearish territory. Chevron, just kind of what I was saying on the other one. On Valero, we are, I mean, this is still kind of ugly, but this is an extension, right? We broke down on our extension. Wow, when was this? This was 7/19. It was all the way down to 19 or 94. Earnings came out. How did they do? They beat, but not like the most massive beat. As long as we're above 114 cents, I'm still bullish on this. Just be very careful, because if the oil market crashes, we could see ourselves testing this 94 level relatively quick. Royal Dutch Shell. So this looks basically just like Chevron. Just be careful if the oil market starts to roll over. It could get nasty with all these stocks. So just keep that in mind. But as long as we're above this 39.92, I am still quite bullish. Really, we have to drop below the 33.72 for it to be unbullish. But this is, if we can maintain the 786 and not drop below the 786, then that is just jiggle round up at the top, and let's try to look for a breakout of the 42 area up to trying to retake out the highs, or the 4-year, 5-year highs. Exxon Mobil looking a little bit better than Chevron, but again, I mean, it's following the same path. We really fell off the cliff, came up. Now we hit resistance. Now we're trying to hold ourselves steady. Now, if we can hold ourselves steady, that would be great. But again, watch out for this, for what's coming up. Well, this kind of makes sense. We paid an 80 cents dividend. We had a couple day drop off. They did all right on earnings. Not enough for me to really be like, yeah, they blew earnings out. But again, if you remember, what I was talking about is or what I've been saying for the last little bit, I'm expecting more December to be the earnings pop that we're looking for, just because they're a few months behind with the hedging and the reporting and the transfer of the oil. So I'm looking more for the fourth quarter, fourth quarter earnings. We've had the first quarter, second quarter. Yeah, maybe because we're looking, in December, like 3 months from now, I kind of see we'll get better numbers, and then 6 months from now, I see the better numbers. British Petroleum, just like every other oil one we've looked, had a massive drop. But if we look at oil had that massive drop, and oil is almost basically down to where these lows were, but these stocks are not. They're kind of staying tough, right? They're staying up there a little bit, which is nice. I would like to see BP get above this 25.79. I'd feel more comfortable, just because we're below this 50, and it's had quite a challenge to stay above that 50. So it's not really interesting to me until it gets above this 50% mark. Now, if it comes down to the 24 and it can hold the 24, it might be a quick little pop up to the 29.79 or 25.79, but just be very careful how they do on earnings. They beat on earnings quite well, but they beat even better over here, right? And that's kind of what gave us this nice little rounded to drop off. Paying a little bit more in dividends, 1 cent basically, so that's nice to see as well. Total, remember, we don't have very much data with this. This is a new ticker. We only have since since June. Um, Earnings, wow, they did pretty well on earnings. I'm in Colombia right now, and I'm starting to see like I see a lot more total like gas stations and total things. So just kind of reiterate this kind of it's a decent company. It's just outside of America. We don't really see total anything in America. Um, yeah, again, this we don't have much data, so we only have like 3 months. Sunoco. Now, Sunoco's been my winner. It's been my darling for quite some time, and I can't say I don't like it. See how did they do on earnings? They destroyed, right? Well, not really. They just 70 cents over a dollar, so it's not destroyed. It wasn't like it was 3 times more, like an Apple earnings or something like that. But we still did quite relatively well. The 719. This is when oil basically dropped off, and we have reached a new high since then. Pulled all the way back, but a higher low, right? And we are above this teal line, which is like a line in the sand. We are above it. We closed above it on Friday, not by very much, but enough. That's all that matters. Now let's try to get above this 50% mark, which is the 37.12. If we can get above that 50%, then I see us trying to retake this 39, right? But really has to do with oil. I'm disappointed in oil for this little drop off, right? But it wasn't. We didn't go as deep as here, so that's decent. Um, yeah, trying to break this 39 is the next target. I don't see us doing it this upcoming week, but over the next few weeks, if we can get above this 37.12 and then gradually take out the 37.84 and take out the 38 all the way up to the 40.52 or 40.13. KMI, how do they do on earnings? They beat, but I mean, that's not convincing whatsoever. Um, as long as we're above this 1603, I mean, we're some distance away. We're kind of like right in the midpoint of from the high to through the 16, right? Like, 3 points, we're right in the middle. So, 2 points, like $1.50 down and $2 up, we're right there. So just keep that in mind. Earnings came and gone. Dividends came and gone. We're having trouble at the 1734, but if we can take that 1734, then I see us trending higher towards this 18. But again, it has to do everything with the oil market. We got E. Oh, wow. E's starting to really pick up. I like this. This isn't bad at all. I mean, I just don't give me. Wouldn't bet the house on this, by no means. But we are whatever. I mean, they don't tell us anything over here, and I mean, come on, you had the exact same earnings as last time. That's a little bit. They're just estimating. So it was what I think this is an Italian company, so yeah, don't worry, it's difficult to see. However, if we can get above this 24.84 and maintain it, then we're looking great. MMP. MMP so far is probably our best looking oils. It's doing our best of all the little oil stocks. We're just took out the 50, and as long as we can maintain this 48.21, then I'm satisfied. We almost double bottom, but not quite enough. Let's see what our earnings were. Excuse me. Yeah, we beat not quite as lovely as Sunoco, but they still did great. Remember, these are in pipelines. They're paying a decent dividend. Yeah, $1 per every 3 months isn't bad. Yeah. So look for if as long as we can maintain this 48.21, then look for us to try and kind of take out this 49 back to this 52 and reach our target, which is basically 54.57. However, again, like I've said before, a lot has to do with the general oil market.